Hello and welcome to our Ask the Expert series. Today we're excited to have Jeremy Klingers, a licensed mortgage broker here in Portugal, to help us dive into everything you need to know about financing your dream home. Thank you for joining us today, Jeremy.
Thank you for the opportunity.
We know mortgages are a key part of buying property for many people, so let's jump into it. To start, could you give our viewers an overview of the mortgage landscape here in Portugal? How does it compare to other countries?
That's a good question because every country has its differences in terms of mortgages and financing. In Portugal, it's actually very simple. There's only one mortgage, which is an annuity mortgage. That means it's always capital plus interest repayment. Okay, so at the end of your term, you are completely debt-free. The property is yours, and that's it. In the UK, in the Netherlands, different countries in Europe, you got buy-to-let, you got interest-only mortgages, etc. Those are all non-existing products here in Portugal, and there's also a huge difference in if you are a tax resident already paying your taxes here in Portugal, your income tax here in Portugal, or if you are a non-resident buying a holiday home or looking to relocate to Portugal.
So what would you say are the key steps in getting a mortgage here, especially for international buyers who might be new to the process in Portugal?
Yeah. Well, the key steps is having a good mortgage broker by your side, obviously. The most important thing when it comes to a mortgage is that there needs to be an income. That can be an income out of self-employment or employment, but there needs to be an income. Without an income, banks will not take an application.
Okay, great. And are there any specific challenges or common mistakes that people often make during this process?
Challenges. Well, maybe they don't compare enough the market, or maybe they take it too lightly. That is a common challenge. It's an application. Your clients need to remember that they are applying for a bigger loan at a bank in a country where they have, if it's a non-resident buying a holiday home, where they have zero history. Banks in Portugal can't access Experian or any bank account, etc. outside. So that's something you have to take into account. You will need to open up your financial history to the bank in Portugal, deliver some documents. Might be more documents than you would be used to deliver back home to your bank, right? Then banks can also work with guarantees in other countries. So we can't say, oh, I have a property and I have a good overvalue. Can't the banks in Portugal take that property as a guarantee or the overvalue? No, we can't. That's why I mentioned it's very important to have an income. Based on that income, we can calculate the debt to income ratio, the allowed debt to income ratio here in Portugal. And that's the most important step.
And I just want to touch on something because you mentioned Expedian. So if you're an international buyer, it is a good idea to have a credit report, whether it's Expedian or, depending on where you come from in the world, a formal credit report that shows what your credit standing is, where you come from.
It's mandatory, yes. Experian is worldwide the biggest, most accepted by banks here in Portugal, but some countries don't have Experian, like in the Netherlands, it's a different organization. But yes, it's mandatory to have a credit report. If your credit report, for whatever reason, shows a poor or average scoring, most likely you will not get the mortgage. Obviously, it's a case-to-case basis, as is with all applications. So we would have to see why is there a default on your Experian report. If it's if we can explain it, if there's a good explanation, then banks might be able to still finance you. But
so it's difficult, but not necessarily impossible.
It's not, no, exactly. But it's always a case-to-case basis, as is with all applications. But yes, obviously we want a good score or better.
Okay, so interest rates have been a pretty hot topic lately. Can you explain how the interest rates are structured here and the difference between a fixed and variable rate?
Yes. Well, luckily for us, the interest rate, the Euribor, has been going down. For those who don't know what the Euribor is basically the rate in which banks in Europe lend each other money, and that is where banks in Portugal base their rate upon, which you will contract at the time of signing your mortgage. On a variable rate mortgage, it's always a base spread plus Euribor, and it can be the 6th or the 12th monthly Euribor. It will be added on top of that. So let's say that your variable base spread is 1%, and the Euribor is currently sitting, last time I checked, around 2.8 or something. Then your variable rate at the start would be 3.8 in this example. Is the Euribor going down like 4 years ago when it was negative 0.500, then that would mean that the 0.500 is subtracted from your 1%, so your interest rate at that time is 0.500. That's how it works with a variable rate mortgage. A fixed rate mortgage, it's actually pretty straightforward. You fix it for the agreed rate. So let's say it's 2.8, then that's your rate. And we can work with hybrid mortgages. That means a fixed period for 3, 5, 10 or 15 years. Or some banks also offer the possibility to fix your mortgage for the whole term.
Fantastic. And is there one that you'd recommend for an international buyer, specifically between a variable or a fixed rate?
Well, no, it really depends on the client's profile, on the client's financial capabilities, work, income. So no client is the same. Okay.
Many factors.
Yes, many factors to consider, and this is what I analyze, and based on my conversation with the clients, based on their financial profile, I will give you my advice and why I think that this is the best solution for you, based on also your wishes or your preferences, and then we pinpoint what is the best for you. Let's say that you want to early repay your mortgage quicker than the term we are going to have with the bank, because you don't want to have a debt for a long time, and you know that you have got some cash injection coming in 5 or 10 years. Great, then we'll probably set you up with a variable rate mortgage. Because why? At a variable rate mortgage, your early redemption penalty is 1.5% lower than a fixed rate mortgage. So it costs you less money to pay off the mortgage.
So if you want to pay back early, a variable would financially make more sense.
Exactly.
on the penalty.
It saves you money. And this is how I look at all applications, and based on that I would give you my advice. Currently this last few months, I'm seeing a lot of mixed hybrid or mixed rate mortgages, where the first 3 to 5 years we fix it for a lower rate, and after that you would be entering your variable rate mortgage, because the general feel is that the Euribor is going to keep on going down. Interest rate have been dropped with 0.25 base points last month, and the Fed have announced that they're looking into continue decreasing the base points. So that those are all good factors. So we can fix it for a few years, and then you would have a lower variable rate when you go into your variable rate term. If it's going up again, we can always ask the bank to extend the fixed rate at the fixed rate of that time, obviously, or we can simply transfer your mortgage to a different lender if your bank at the time is not interested in renegotiating with you.
That's good to know. So what are the typical requirements for securing a mortgage in Portugal? Are there any eligibility criteria that might surprise some buyers?
Well, no, as I mentioned, the income is the most important thing. The own funds necessary to complete. Okay, you always banks finance for non-resident, or let's say secondary home buyers, a maximum of 80% loan to value. And in general, I see that banks stick to 70% because we are dealing with non-tax residents. So let's take with the example of 80%. That means that you will need 20% deposit towards the property. But then we also need to take into account the fees and taxes, which clients sometimes forget. And I always tell my clients to take into account an amount of 10% for all fees and taxes and all other expenses included. In the end, it's not really 10%. You know as well the IMT, and there is a amount to deduct, etc. But it's a good amount to take into account, because at the end of the road you are left with money, and you are sure that you have enough funds to complete. And you also have a little bit of wiggle room if, for example, the valuation comes back lower, because this is also an important factor to take into consideration. The mortgage approval which I get you is always subject to valuation, and in Portugal the valuation is done after we obtain mortgage approval. So let's put that into an example. You're buying a property of 100k, we obtain a mortgage approval for 80k, and the valuer is going to the property to value the property, and he values the property at 90k. This is 10k under purchase price. The bank will then adapt the 80% approval which I got you on the 100k purchase towards 80% of the 90k valuation. Okay, so that means that you would have to put in some extra
Find the difference.
Yeah, if you want to continue with the purchase.
So basically, they need to factor in that they need at least 20, probably more like 30% of the total purchase price as a cash reserve, because the banks will only lend up to 80%. And also bear in mind that the valuation will determine the exact amount the banks will lend.
Exactly.
Fantastic. So for first-time buyers or those new to Portugal, what advice would you give them?
Gather people with expertise around you, estate agents with expertise, a lawyer. Please get yourself a lawyer. Don't save money on a lawyer. It's very important due to the legalities of the property, or does the property have a debt, etc. So that's very important. And the registrations. Be patient. Sometimes the process takes a little longer than you might be used to back home. That can be due to a variety of factors, or on the property, or on the sellers, or you name it. I've already seen the most funny stories come true. So and yeah, trust the people you gathered around you. This is very important. We are looking out for you. We are there for you. We want to help you. I would say get in touch with me through Keely and Private Luxury Collections, so I can assess your profile and I can take a deep dive into your personal profile to have a look at what your possibilities could be. The advice is free, so we can. I'm always looking forward to have a chat with you. So just get in touch with us.
Fantastic. That's great advice, Jeremy. So thank you once again for sharing your insights, and thank you to our viewers for tuning in. Please don't forget to subscribe to follow more of the Ask the Expert episodes, and to like and comment if you have any more questions on today's video. We're here to make your dreams of owning a home in Portugal a reality. Thanks for watching. Thank you.
Thank you, Keely.